Hi again, everyone. Welcome to another episode of RV Business Capital Talk, sponsored by the Dicor Corporation. I'm Rick Kessler. With me, as always, Sherm Goldenberg. And joining us today is Mike Happe, President and CEO of Winnebago Industries. Mike, thank you very much for joining us.
Good to be with you guys again.
We're, of course, talking to Mike a couple days after, excuse me, the company's third quarter financial report. And congratulations, absolutely stellar numbers. I have three things I wanted to draw attention to. $1.5 billion in third quarter revenue. It's a 52% year over year increase overall, but also 41% organic growth when you pull out Barletta Boats acquisition, I think, right?
That's correct.
Second item was 13.2% market share in the RV retail arena. Again, growth going on there. And the third item that I really was impressed with, your gross profit was $273 million, 61% increase, but the gross profit margin was 18.7%. That's just incredible.
Well, thank you, Rick, for the highlights. And certainly all credit goes to the now more than 7,200 employees we have at Winnebago Industries. Every one of them has been working extremely hard, for many years, but, especially this year as we're navigating some pretty interesting market conditions. So, we're proud of the results, but equally, focused on what's ahead of us in the future.
It seems to me, Mike, that to a certain extent, it's got to be a confirmation of the corporate strategy that you all have employed to, I guess, diversify would be the term, and to pursue this outdoor market in general. Is that kind of your read on this?
Yeah, sure. We're definitely a different looking company than we were, 5 or 6 years ago. I mentioned this during our earnings call this week, but, in 2015, right before I had the privilege of joining the organization, we went to market with predominantly the Winnebago brand on a Winnebago branded motorhome business. And that was 93% of our revenue at the time. Today, we have 5 great brands: Winnebago, Grand Design, Chris-Craft, Newmar, and Barletta. We've got 7 different businesses. We have 2 towables businesses, 2 motorized RV businesses, 2 marine businesses, and we have a small specialty vehicles business. And so subsequently, we are much more balanced. We operate now in 2 major outdoor recreation industries, that being RV, which is still very much our core, and then the marine business, which is growing for us. And so we are a much different looking organization, and consequently our ability to have financial stability and hopefully good financial performance is definitely improved because of that, new complexion of the portfolio.
Rick?
Mike, some of the your earnings call yesterday was rather interesting to listen in on. Those analysts don't hold back, that's for sure. What they were hitting you pretty good on the market conditions at the moment. And granted, the third quarter report was stellar, but that was third quarter. What's this quarter looking like? That seems to be the theme that they were really hammering home.
Yeah, certainly our investors, I think, acknowledge the progress our company's made, but to your point, they're very focused on the future. They need to know that a dollar invested today is going to, return more than that in the future. Our third quarter results were for the months of March, April, and May of 2022. And so our Q4 is June, July, and August. And obviously we're near the end of the first month of that quarter. One of the comments I made on the RV retail side is we've seen relative RV retail stability, over the last probably 45 to 60 days. And what I mean by that is the comp percentage against a year ago has remained relatively stable in our business for the months of April, the months of May, and now the first two and a half weeks of June. It's certainly not as strong as we'd like it to be, but we're coming off record numbers in 2021. But RV retail, for our business, and I can't speak always to the industry because I don't have some of those numbers at all times, but our retail has been relatively stable in terms of its negative comp percentage versus a year ago. And we know that, the market's very uncertain, very volatile right now, and we'll see where that heads in the future. But, the towable RV, segment is really what we've been focusing a lot of our attention on. That's where retail's been more depressed versus a year ago. And that's where, as you all know, field inventory is ample, as we called it this week. And we have to make very good business decisions about how much we run our plants and what we work with our dealers to take into the market, because we certainly don't want to put the dealers in a difficult situation by them having too much inventory. So very focused right now on the towable RV segment and getting that production rate right.
When you say towable, you mean literally Winnebago towables in the Elkhart area?
Well, Grand Design RV is our biggest towables business, certainly. And then we have the Winnebago towables business, just south of Grand Design and Middlebury as well. And both those businesses, have been gaining share, over the last many years. Obviously the success of Grand Design is unparalleled, in the history of the industry. And so we continue to have good momentum on the retail side with those two brands. But inventory of those two brands is at a full level as well, and so we need to be responsible and disciplined and make sure that we work with our dealers to give them not just the right volume of product, but the right mix of product here going forward. And so we're very focused. I will state though, on the motorized RV segment and our marine segment, we are going to probably continue our production levels, at pretty strong levels, because field inventories have not repaired themselves to normal levels yet, and retail is hanging in there on motorized. It's less down than towable RVs, and on the marine side, retail's actually been strengthening here over the last 60 days. And so that's why our focus has been here on towables, to make sure we especially get that right.
What, if to the best you can anyway, how's the rest of this summer going to play out? Lead us up to open house, right?
Well, yeah, rest of the year for that matter. Yeah, but go ahead. Yeah. I'm sorry.
Well, let's start with the existing users first. The demand for the outdoors in terms of participation has never been stronger. And so, we've been asked this week, do you see outdoor participation decreasing? And our blunt answer is no. Campgrounds are full. It's hard to get reservations. People are outside. It's hard to get a boat slip at a marina these days. And so, consumers want to be outdoors with families and friends, creating great memories and experiences. RV dealers are still renting products at high levels, and the RV shares and the outdoorsies are extremely busy as well. So outdoor participation is strong. And even though gas prices are elevated, people will hopefully just travel shorter distances, but still use their products, at a high rate. There's no doubt that new use sales or new RV sales are under pressure. And you are seeing probably families with less discretionary dollars, being challenged right now to invest in, discretionary outdoor toys. And we believe that that's probably going to sustain itself for a while. We offered a perspective from a retail standpoint that, we think the RV retail for calendar year 2022 is probably going to be down somewhere between 15 and 20% for the whole of the calendar year versus 2021. I really don't want to get into the business of forecasting 2023 yet. I'd like the benefit of the summer retail season. And as you guys said, going into the open house in September in Elkhart, to judge a little bit where, next calendar year might be headed. But we have a great leadership team at the company. We have dedicated employees. Again, we're gonna hopefully make good business decisions that aren't only in our best interest, but are in the best interest of the industry and especially the dealers as well. We have very special relationships with our dealer network channels in each of our brands. And we really don't want to violate that trust and be selfish, with what we're trying to achieve. It needs to be ultimately a win-win, with the dealer body as well.
When last we noticed the open house and you all were at the Alcona Country Club exhibiting. Of course, that didn't happen, like a lot of things in the pandemic era. Are you out there again? Is that your plan?
Well, that was the Winnebago brand that was planning to be at Alcona, at the last open house. And, each of our 3 RV brands, Newmar, Grand Design, and Winnebago will have a presence again at an open house in September in various forms. I really let each of the brand leaders in those businesses, drive their strategy for open house. We think the dealers will come out in full force. We think, obviously they like the open house event. They want to talk to the OEMs. They want to talk to the suppliers that are also exhibiting, and they want to get a pulse for the market. And we anticipate that they'll be looking at obviously the next model year product, and hopefully after some retail sales this summer, that they'll be in a position to place some orders, going into fall of 2022. So we think it'll be a good event, and fortunately from a pandemic standpoint, things seem to have settled to the degree that we can have that event safely and still, which is a positive thing. So yeah, we'll show up with all 3 of our RV brands and be ready to engage the dealers in a hopefully a tremendous fashion that week.
Rick, you want to wind us up here?
We'll save this topic for the next video, because I do want to talk to Mike about the American League Central standings. I can't really say much. I'm a Tigers fan, and we're going way down.
Yeah, well, I do have my twins pullover on this morning, so not quite as nicely dressed as the 2 of you, but I am a Twins fan, and they're at least competitive this year, Rick, which will make hopefully my summer a little bit more fun in terms of watching baseball every now and then.
That sounds good. Mike, thank you very much for your time again.
Thank you, gentlemen.
Thank you.